Jack, I really appreciate you joining me and being willing to share your story some here on the video for other people to watch. So thanks for joining me.
Alrighty. Yeah.
Yeah. What I'd like you to do is just introduce yourself real quick, but then also tell me, why did you start your own accounting firm?
Well, I'm Jack Heil, and I practice in South Charlotte, North Carolina. And I've been here in Charlotte, North Carolina since 1985. And I've been practicing solo since 1989. So I think I'm going into my 48th tax season. The first 10 years, with a few brief stops, were spent with Deloitte. And in Deloitte, I was part of a group that was a hybrid. We were not audit, we were not tax, we were not consulting. We were trained to do all three. And so I began to get my, sense of working with small businesses. Our team was designed to go out and find the next big clients for Deloitte. And it would turn into somewhat of a pipe dream, because while I might go out and find Paul's muffler shop didn't want to come into Deloitte, get an audit, and pay 50 grand for and that was the mindset. And it was probably one of the first things I learned, is that, as a business owner, you have to match up. It didn't make sense for a sole proprietor to be doing work at Deloitte any more than Deloitte doing work for them. Deloitte did their work with Duke and the banks and, the big companies. And, but it gave me a taste. Our group was very fortunate, because we were allowed to do tax. We were allowed to do audit or accounting, advisory. We were taught how to speak publicly. We were the first to be given computers to do things with that. And we also delved into financial planning for executives. And so what I was getting a taste of when I was at Deloitte was that sort of broad brush. And then when I began to understand out there were, like the fellow that you went to work with, those people were out there doing basically that. They were taking care of the clients locally in the community. And so that's what I did. I had a love-hate relationship in my 10 years with Deloitte. When I was at Deloitte, they'd say, "You're a marketing guy, Jack." And when I'd try and do marketing, I did a brief stint with ADP. I did a brief stint with a mechanical contractor. And, every time Deloitte would bring me back and say, "Hey," but in the end, I just didn't fit into that large firm mindset. And towards around 87, I bought a small practice. The fellow was an insurance salesman, and he was doing 550 tax returns. Wow. And, of course, I go into that environment. It's a small little office in a little part of Charlotte, referred to as Indian Trail, little town of Indian Trail. And, my Deloitte ego, my Deloitte mindset went in there, and I just thought, how in the world am I going to do this? And, but honestly, he had a great system. He was one of the first to use computers. He was using Drake when Drake was in a DOS. You're probably too young to remember what DOS is.
I remember, I do remember DOS. We had a computer in the early 90s, maybe late 80s. It had DOS on it, but it wasn't long before Windows 95 came out.
Right. My mindset was, give me the difficult thing, give me the most hard thing to do, and then some little person comes in with a W-2, and I felt so guilty, because by the time I'd hammered it all in and my assistant was printing it off, they were walking out the door, and I didn't realize what a gold mine I was sitting on. I just, didn't understand it. And of course, Deloitte said, "Come back again. We got this. We want to do this with you," and blah, blah, blah. And so I ran back to Deloitte after one tax season there. I did get 550 returns done, but, I don't know if you have those, but when you get somebody that just got a W-2, it's a no-brainer, and it's really easy. And now in my old age, I'm like, give me that W-2. I'm happy to do that.
You want to do it. So you bought the firm, did a tax season, and then went back to Deloitte. What'd you do with the firm?
One of the people that I hired took it over for me. She was awesome. she could do it all, and she wanted that, and so I just said to her, and I went to the guy that I bought it from and said, "Are you okay if I transition this back to her and let her take over the same deal?"
Okay.
Um, what that guy was he was the insurance salesman for that area,
Yeah.
and I didn't know anything about insurance, and at that time in 1989, CPAs could not sell insurance
Mm.
securities or whatever. But I saw what he had done after the fact, and I was thinking, "Oh, this is brilliant." And a fun fact, I there were out of that practice, one of my clients that I got and kept through the whole time was a large ready mix manufacturing plant, and they became a large client of mine for all of the '90s.
Yeah.
So I went back to Deloitte for about another year, and again, it was the same thing. Is a huge love-hate relationship. I had so much promise, but also I was insanely immature. And
Mm.
I was classically, I would take two steps forward and four back, the just, at one point I was in charge of a small office in um, Elizabethtown, Kentucky, and I think they looked at me and said, with his personality, he can go a practice. But um, I needed way much more than that at the time. I look back on it. I was happy to jump at it. I, stroked my ego in a lot of ways, but when I look back on it now, I was just woefully unprepared to take on those roles. And but the other thing is that in Charlotte, North Carolina, when I moved here in 1985, the city fathers, the economy was just on fire.
Mm.
In truth, Brad, it's never stopped. It has just been incredible. And so when I made that decision to leave in '89, it was a good decision. The partner in charge loved me. He gave me a few clients to get back out on. And so I went out and I was on my own. And um, probably one time have I ever written a proposal for some work, and that was with a current client, and he went with someone else. So, but other than that, it was just like coming in, and
Wow. Yeah.
never
So when you left
worried.
the second time, you didn't buy a firm? Did you start your own, or what'd you do the second time?
Well, yeah, I just went out on my own. I've been solo all along,
Right.
and
Right. But you didn't buy a book of business. You just went out with nobody and started
right.
finding people.
Right. I think a lot about you when I listen to you and see you out there and stuff like that. And I was thinking that, those 30s and 40s are golden years. You're meeting people, you've got family, there's a lot of ways in which to meet up with people who
Mm.
need accounting and tax and stuff like that, like you're seeing in this. And so the one thing I will tell you is I was totally ignorant about business, being a business owner. I think I just wanted to be of service. I was happy to
Mhm.
get into Deloitte and learn what I did. It gave me the swagger. It gave me openings to doors that I wanted. But I never really thought about myself and what I wanted to do and how I wanted to do it. And if somebody said I need an audit, I would do the audit. If somebody needed a tax return, they would need it. At one time, Deloitte asked, in Charlotte, they were saying, "We don't have a litigation department. Jack, will you start that?"
Oh
You
wow.
know, it wasn't because I was some great technician. It was because I didn't have any hesitation to go knock on an attorney's door, take
Yeah.
them to they were doing this. And, but what that did is it led to me to really have a good combination of tax and accounting and the forensic side. I was stroking that and I was learning how to navigate communicating with insurance companies, property and casualty claims groups,
Mm.
and get involved in, like if a restaurant burns down, what are the loss of earnings while they're rebuilding? Some of that would lead to partner disputes. I rarely, thank God, got into divorce matters.
Mm.
Uh, but most of mine, I would say 95% of it was um, business. I call it business income loss. You might hear it as business interruption insurance. And
Yeah.
so helping helping insurance companies prove what they would reimburse somebody who had been damaged.
Yeah. Yeah. So I know I've shared with you before that my first tax experience, I went with Dixon Hughes, which is now Dixon Hughes Goodman, I think. I don't even know if that's right anymore, but they're based out of Greensboro right there. And I did audit with them. Then I switched to tax, went to a small firm in New Bern, North Carolina. That gentleman he had worked for another company. That small firm was supposed to give him and the other guy with him partnership. Well, kept dragging it out to the point where he was like, "I'm gonna go open my own business." And then a year later, the other guy went and opened his own, and they were two of the main ones in the town I grew up in. And, I came in 2008. He started around the late 70s. But one of the differences I see is one of the things you just mentioned, right? Like, there was a client we had. There were two clients we had. One was a pool contractor, and one was like a furniture wholesaler. And I just remember thinking, like, how did this tiny office get these giant $10-15 million companies? And it's a pool contractor, and we had mechanics, and we had dentists, and we had lawyers, and we had the wholesaler with the thing. And I was just like, man. And so I remember asking, he was like, yeah, they were tiny when I got them, and I grew with them, right? And I feel like you don't see that as much anymore, where it's like they needed a review, so we figured out how to do reviews and we started doing them, and I feel like you got so much more specialization now. So that's one of my main questions is that's something that I've seen. Take me back to 1980, right? Like what have been some of the major changes in the industry? Whether it's technology or the type of work or the work clients are asking for, like what are some of those main changes you've seen and had to adapt to through almost 4 decades?
Well, there is a constant pivoting. I used to say that there's nothing more volatile than a professional partnership. Like you just described, you have two CPAs working together and all of a sudden they branch out. And I experienced that as well. I think technology has taken us through that. If you're in the 80s and you were doing write-up work and you're doing it manually and whatnot, and then all of a sudden IBM puts a floppy drive computer on your desk and you can all of a sudden create more. So that the technology started to change us. And I think for guys like you and me, it's really the most interesting thing is that when I was first practicing up until about 2000, my poor wife, I had to have an office and, I had to have a whole room just for the accounting and tax books and research that we would do. And I don't know if you remember those thin sheets of paper and, they would come in and, about a foot thick and she'd have to take the pages out and replace them. You may not have even experienced that.
Which ones were the research material, like the PPC materials?
I can't even think of it. Used to get this one had these binder systems, and you would buy the binders, and it would be like
So Charlie had those. I think they were PPC. PPC
right.
materials. We had all the review ones, and that's where when I had to review the financials, I was like, I need to check this. They had sample footnotes for the reviewed financials and everything in them.
Right. I think one thing that we're knee deep in, and I think it creates a lot of issues. But back in the 70s and 80s and 90s, everybody kind of had their lane. You had an insurance person, you had a financial investment manager, you had an attorney, you had the accountant, and a business owner would be surrounded by this team of people. And we would actually meet together and we would get to know each other and we would refer and we would stay. Well, I think in the 90s what we started to see, like with QuickBooks and then the banks, instead of being like in New Bern where you were, those two guys probably were very well connected with the strong local banks there.
Oh yeah,
where they connected with the bankers, the county judge, anybody of any politics or anything. So you could get things done in that way. Honestly, that was my favorite time to work in when I worked in Elizabethtown, Kentucky as a manager in charge of a Deloitte office. I was, I was on a first name basis with the bankers. We'd go to the Rotary Club together, the county
Hmm.
judge, the mayors, all those people, the business owners. We met every week, and so you knew everybody.
Yeah.
Um,
Yeah. Even like I said, I graduated from NC State 2005, did my master's, went to Dixon Hughes 2007, got back to New Bern in 2008. So 2008, we were using UltraTax. We had a few clients that had Peachtree, and we had a few that were using QuickBooks Desktop. I remember looking at QuickBooks Online and thinking that it was just horrible, which it was back then, and convincing, any client who wanted to go to QuickBooks Online, I was trying to convince them to stay on desktop because it was so bad. But the vast majority of our clients were either monthly, business clients were either monthly or quarterly, bringing their 3-stub business check stubs where, they had written who it was to, they had written what it was for, insurance, and even had coded it with the number 5150 or whatever for insurance. And my first job was to take those check stubs in Accounting CS, which is Thomson Reuters product, and manually type in every transaction and post it to the general ledger, do the bank reconciliation, print it out, put it in the 3-ring binder, and put it on Charlie's desk for him to look through it. And then we'd schedule an appointment with the client. They'd come in, we'd talk through some numbers, and that was it, And yeah, I mean, like you mentioned write-up, right? That write-up was bookkeeping before bookkeeping. And, I definitely know that there are people I've talked to on LinkedIn and who watch the videos who don't even know what write-up is. But yeah, and then you gave them compiled financials, your name of your firm on it, a letter that says you don't take any opinion on it because it's not a review or anything, but right, it's still on CPA letterhead, saying that the financials were compiled, and all that just like went out the door. I'm guessing because of QuickBooks just taking so much market share.
Right. Yeah, yeah. And but the other thing is the byproduct of that was by doing those compilations, we would be alerted to something like, oh, why did you do this transaction?
Yep.
Oh, this, and you had communications going on. So when people were doing their own, and they didn't even know whether, in QuickBooks, the master there is if you get the type down, you're in pretty good shape. But a lot of times people get the type of account wrong, and then they're like, oh, none of this makes sense to me. Or someone comes in and says, yeah, I can do that, and then you're telling when we would do a compilation, we would look at it, we would kind of see it's reasonable. You might even have your partner look over it and see things that you didn't catch.
Yep.
But then you also had the owner, sitting there looking at them and being able to say, oh, this shouldn't be posted here, or why is this account out of balance? And so that honestly, I miss that the most, that communications, the ongoing communications. And that's what I've been trying to do with my practice now, is get back to that and encourage, hey, this is an ongoing thing. We should be engaging, even if it's just to say hi to each other, um, on a more ongoing basis, to be more proactive. But so yeah, but I mean, I didn't expect to go there. You're making me think of things that were way back then, and here you come in the 2000s. Well, a lot of that transition was happening right before you. It was in the 90s when these, the banking relationships kind of changed, and it got so bad. Like I'd go to meet with a client, and they'd be having a new line of credit for $1 million, and I'd say, "How in the world did you qualify for this?" Is it, oh, at lunch, I put on a napkin that this was what I thought my sales were.
Oh
And
my
this,
gosh.
and boom, it's just everybody just started saying and having different rationales behind how we're going to do business.
Yeah. Well, that's where, I mean, like you said, I mean, so New Bern, around 30 to 35,000 people, then probably still roughly the same now, smaller town, Eastern North Carolina. So I'm guessing, again, the guy that I was working for, he probably was able to hang on to the older ways a little bit longer because, you got small businesses. Nobody, I mean, I could probably count on one hand the number of tax returns we did that weren't North Carolina tax returns, because maybe one client moved out of state and kept us. But you didn't have Zoom, right? I tried one or two, even in 2008, like I tried one or two Skype appointments and it was just horrible. And so
Yeah.
everyone, I mean, we weren't even doing clients in Raleigh, right? They were all from New Bern, Craven County, Pamlico County, like the surrounding counties. They were small businesses. I was part of Rotary. We did the breakfast once a month, and I'd go to the Chamber of Commerce meetings. And, part of that, I feel like you probably still get in smaller towns. I'm in Orlando now, and I joined the Chamber, but it's a lot different. It's a lot different, kind of who's there and how you're networking is a lot different than small town, but also 2-3 decades ago as well.
Right, right. I think to make any movement in a large city chamber, you have to up your game. You might be able to get in for annual dues of 500, but if you really want to get connected to the people, you got to do those 5, 10, $25,000 tier memberships to make any kind.
Mm,
And
yeah. So I'm
larger have that.
Yeah, I'm in like
All
a subset of Orlando, so I'm not actually in the Orlando chamber. I'm in the Lake Nona chamber in our
right,
community, and our community is about 11 to 15,000 people, and growing by what feels like 11 to 15,000 people every 6 months. But so it's got a little bit of that kind of smaller feel to it, but still not quite like a small community.
right. No, and that's good. But I think honestly, how many do you need? And that's what I loved about Elizabethtown because I could be a big fish in a small pond. Whereas if I moved up to Louisville and did anything there, I was
Right.
nobody. You Um, but Charlotte is still on an insane growth thing. I believe you'll hear anywhere from 150 to 180 people are moving here a day. And it's in the surrounding counties, and just like where you are, you can tell everything is just expanding. You're like, where are these people coming
Oh yeah,
from?
yeah,
Yeah.
and that's what I mean. Like even like I want to try to find like, oh, if I refer you to an attorney, they might be 45 minutes away, and it's still Orlando, but it's not like, hey, go see Jack right down the street. Like I see him at church every Sunday, and like his office is downtown, and we share a ton of clients and things like that. Like you don't see that much. The thing that it bothers me. The thing that bothers me is we're moving farther and farther away from, I think, being human in terms of, like technology is great. It helps you get work done faster. But if we remove the human connection, and, I've got a lot of Florida clients, but I've got a lot of clients outside of Florida. And it's great because there's more opportunity. You can specialize more. You can earn higher fees that way. But you lose connection with other people because of that. It's like, oh, okay, well, I'll just get into your QuickBooks. You don't have to come by the office and drop off your checks. I'll hop into your QuickBooks. I don't have to see you. I don't have to talk to you. And so I think, I don't know how long it'll take. I think there's already some people doing this. I mean, you see some people moving back out to like rural areas, but I think we're going to see people eventually start to miss that and come back to, I don't just want to upload my documents. I want to sit down and talk to you. I want to see you. I think there's going to be people moving back to more human connection, a more human pace of work, because we're working faster, honestly, than I think we should because of the technology.
Yeah, I think speed can help you miss things too. But I can tell you, my October was one of my favorite months in my practice altogether. It wasn't because I made a boatload of money. I actually, when I was taking time off, I was trying to figure out who am I, how am I going to practice, who am I going to serve, what am I going to do for them. I was going knee deep into that, and those questions seem easy to ask, but they're very, very hard to answer,
Hmm.
especially for, like yourself or me. You can dance in tax, you can dance in a business advisory situation. You've got a specialty over here with the reasonable compensation, and it's easy to get, a master of everything and not really be anything, or
Yeah.
are your clients, they're everyone, and then they're no one. And so I was really trying to figure that out. And I knew I was going to put the brakes on my forensic practice. And one of the things I've done, and you might do it too, because over decades, what happens is I came out and I started, okay, no more audits. When peer reviews came in, I started
Mm.
saying it's too expensive to be able to help somebody. So I was responding to the regulations and the environment, and really kind of saying, what can I do? And some of the people that I've seen you interview, they're raising children, they're trying to figure out how to have their career. And I was saying, I didn't do that. I came from an environment where, and it was all BS. It was like, oh, I'm working 80 hours a week,
Yeah.
and 45 or 50 of those hours were nonsensical. You
Yeah.
know, that was the culture. And the other thing is that you wouldn't be able to dress like you and I. You'd be, I don't know, you might have missed the game, but we were wearing suits every day.
Yeah,
And
I didn't have to wear a suit, but it was definitely button up shirt and dress pants. Like
right,
I had to do that, and then no, that was every day. Our office again, 2008 to 2012, we we started January 2nd, and everyone that we did compilations for, I was preparing business tax returns on January 2nd, right? And so we could get all the business returns done through January, but I'm working 7 to 7, Monday through Friday, and a half day on Saturday. Now, that's because I was new. That's
right,
65 hours a week. The
right,
guy that I was working for, he was in there at 4:30 in the morning. He was there till 7 p.m., maybe 8. He was there all day Saturday, 8 to 4 probably, from January to April. Now, I did notice that in January and February, I was going to the office passing other CPA firms with empty parking lots. And then in March and April, I was driving to and from the office passing full parking lots. And so what most of the other CPA firms were doing was they were kind of taking January and February light, and then they were just getting killed in March and April. Whereas the guy that I worked for, he was like, January 1, January 2, we're going to be here. And we kept consistent hours from January to April. Now they were, 55 to 60 hours a week. But I mean, kind of you mentioned this too. You don't have many extensions. Now, I do not remember, I don't know how many returns we were doing as an office, but we were pretty much wrapped up with tax returns, except for the random one here or there by mid May, right? Late April, mid May, and then we went to a 4-day work week the rest of the year. But yeah, I look back at those tax seasons, and I think like I put in more time during tax season, but I don't put in that much time during tax season. The extension is more my friend now because I don't want to put in a 60-hour week. That I feel like I have no life outside of a 60-hour week with, again, kids 11, 13 and 15 and wanting to be there for that stuff. But I saw the guy that I worked for, like I said, he's there 5 a.m. to 7 p.m. His wife would bring him lunch. He'd eat it. And then, well, most days I think he'd go home, but he'd go home. His wife already had him lunch ready. He'd spend about 10 minutes at home. He'd eat lunch. He'd come back. He'd spend about 10 minutes at home for dinner. He'd come back. And that was his life from January to April. And he'd always tell me, like, I don't want you to make the same, mistakes I did in life. But then anytime I tried to leave the office, he'd be like, you're leaving already?
right. Yeah. I can tell you, I remember those days, when I was really trying to make a push. It was late 90s, early 2000. I was in a, high rent district, high image, everything else. I was saying, okay, I'm going to grow. I'm going to be the next Deloitte. I'm going to, do all this nonsense. And I was just miserable. And I think that time we did 350 returns that year, and I could hardly stay awake. And the
Hmm.
television station wanted to come and interview me, and I still had clients coming in, and I begged my wife. I said, "Give me just 5 minutes. Let me sleep for 5 minutes." And I remember doing that interview, and I was thinking, never again will I put myself in this boat.
Hmm.
And I began to realize I was never going to be firm owner. I was never entrepreneurial. I just wanted and liked one-on-one with my clients. And so I started letting as people left, I didn't replace them. And um, uh, by 2005, when my rent was up, I had 2 weeks. I said, Donna, can I take the living room for while I figure out where I'm going to rent from? And I came here and I was so productive. Where when you're in a nice building, what people don't realize is on Saturdays and Sundays, it's either going to be cold or warm.
Mm.
You know, there's nobody around except you.
Yeah.
And I was home. I could see my kids. I could have lunch. It was just insane how productive I was.
Mm.
Somebody might call me at 10 o'clock at night. I'd take a look at something on the computer, give them the answer, and they'd be like, "Oh, thank you. You're really responsive." And I'm, wow, this is pretty cool. So since '05, I've been working out of my home office. And, my wife said, "Give me one reason why I should give you my living room." And I told her, I said, "I'll give you 22,000 reasons and tell me what you would do with that." And she goes, "Okay." And luckily, my office furniture, everything fit perfectly in our living room.
Oh, that's nice.
So when
Yeah.
COVID hit, I told my clients I've been training for COVID since 2005.
But
You know,
2005 seems, yeah, that seems early. I remember, so I started working in 2008, and then our first kid was born in 2010. And I remember talking to Charlie and, being like, I don't want to miss a third of his life because, he's asleep when I leave the house. He's asleep when I get home.
right,
Can I work from home?
right,
And he did not want me to work from home. Now everything was paper too. So I mean, if I was working from home, that meant sticking the files in in my case and going home with them. And I did it a little bit. He did agree to it. I did it a little bit, and I hated it because I didn't have the setup I have now, right? Like it was like I was on my laptop and I had the papers and the kid was crying, and I was like, okay, you're right. I can't work from home. I can't work from home. But now, I only work from home, and I love it, right? Because, like you said, if I need to do something present, I feel like presence is huge, right? And so even if I'm in here, I can step out for a minute. I can be present in their life more than if I'm gone the whole day and then just coming home at the end of the day tired and exhausted.
right. Yeah, no, I hear you, and I admire the ability to do that and think that. Technology plays right into us being solo. The information we need, we can get through the internet.
Hmm.
AI is a game changer in providing that information, and that's only going to get better for us. So really and truly, I had a friend that was a financial advisor. He says, "Jack, it's the greatest business I've ever been in. They give me a phone and a desk, and all I got to do is call people." And he was brutally successful. I started thinking, well, this is the same thing. I've got this outfit that's generating this revenue each year. I've basically got a laptop that was $1,800, a printer that was $1,800, and a monitor. And I'm in business, and that's a really low cost to entry.
Oh yeah, yeah. It's ridiculous. I mean, I kind of put together a video on it in a post too, where it was like for less than $5,000, you could start up a tax and bookkeeping practice, and a lot of that $5,000 you could actually cash flow monthly just by getting your first client. I mean, you don't even have to buy your tax software until you sign up the first client. So you could start a tax practice and a bookkeeping practice without even putting a dollar into it if you do it that way. It's a really good opportunity. So what does your firm right now look like? How many clients, how much revenue, what type of work are you doing?
So the what my firm looks like now, because I've really repivoted. I just got rid of. I did the other day was my last forensic claim, and so I've gone from having four revenue streams: forensic, business advisory, accounting, and what was the other one? What was it? No, okay. I got rid of business advisory and I got rid of forensic. And what I've been doing is building up my tax and wealth management practice.
Mm.
So, one of the things that changed, I want to tell you something real quickly. I was just thinking as you and I were talking about computers, when in 1989, when I went on my own and I had an assistant come with me from Deloitte, we rented an office. I bought two computers. And at that time, you probably don't even remember these, but they were called dot matrix printers.
Okay.
They weren't laser.
Yeah.
And you had
Yeah, they made
paper.
that horrible noise and they had the tear off hose down the side.
Right. And, but I had the most sophisticated because mine were legal size, instead of portrait size paper. And that was $18,000 for those two
Wow.
computers and printers for that. They weren't networked or anything. So
that's crazy.
Yeah. So what I've been doing is that I was pivoting from the 4 revenue streams. I decided first to get rid of the business clients. And as I was doing that, I was putting more emphasis in the forensic and the wealth management. And so I don't know, you remember last year, Hurricane Helene hit last year quarter. And all of a sudden, my forensic just took off. I did one email to about 40 claims adjusters. And I had claims that just kept coming in, 2, 3 a week. And so it was great. It was just gangbusters for me on that. But I was just wearing out. The claims were becoming more difficult. People less and less were, they were doing their own books. They didn't know how, I was getting more trash to kind of work with. And I wasn't licensed as an adjuster. So all I could do is give an opinion on those things.
Okay.
But I just getting burned out on how many people do not really pay attention to filing taxes or believing that's necessary or just throwing whatever they can together. And doing normal accounting, I wouldn't know that. But being in that forensic world and seeing it, really, I was just like, oh, I'm so tired of dealing with this. If I hear one more time, I'm a small businessman, I can't keep up with. And part of it is it's a lot complicated. It's not like everybody's trying to just beat the system. It's just overwhelming to them.
Yeah.
And then I was building my wealth management practice. And that I really liked. And I could see a connection between individual tax and wealth management. I could see a need to give a client both of those. I'm sure you've had clients come in, you're seeing them in tax time and all of a sudden they're shocked. You're shocked. Why did you do this? Blah, blah, blah. And so I was thinking this is a way to help my clients by being proactive, leading through tax, and then being able to be conversant. It wasn't that I wanted to replace financial advisors, but I felt like it's easy to get caught up in your bias. It's easy to, think only as a CPA. So I was getting licensed because the AI CPA told me to, but also because it allowed me to be informed on how to advise a client at tax time when they were asking me a question. And I could talk intelligently if the financial advisor wanted to do that. But that I find is kind of difficult because I butt up against the financial advisor's business model, which is a little bit different than mine or a whole lot different. And it's difficult to kind of combine those when the practice models are not in sync.
Yeah.
So,
definitely. So all right. So I wanted to ask you this question too. So it was like, we had the tax code, then we had the huge tax change in 86 or 89, 86.
yeah.
You got, when you took the CPA exam, it was like, if you had a building placed in service before 1986, and I'm sitting there thinking like, it's 2006. When am I going to have a building placed in service before 1986? And so, but you had that, right? Huge tax change. Then I feel like, okay, we had Bush, right? He put some stuff in, second Bush, he put some stuff in, and then it was going to sunset, right? And this was like the late 2000s when I first got in. Everything was going to sunset, and every year we got this 1 year patch, right? And then, then Tax Cuts and Jobs Act. So in terms of like the 80s, the 90s, 2000s, 2010s, 2020s, tax changes, keeping up with tax changes, keeping up with new laws, the complexity of the tax code. What have you seen there? Like, it's changing more frequently, right? And is it more complex than it was back then?
Oh, I think 100 times. In the '70s, when I did a complicated tax return at Deloitte, I can remember having maybe 4 pages of forms, and a complicated one had a 4-column paper schedule behind it, or two of those schedules. You'd be walking into the partner or the secretary saying, "Can you type this up?" And that was all it was. And of course, then CCH came out and started saying, "Let's automate it." And I don't know if you got to do that, but what would happen is that we would get the tax information, we would put it on the input forms, send the input forms to CCH to process them.
Oh,
That would
wow.
happen overnight. They would send it back, and if there was an error, then you'd get charged for redoing it again. And
Mm.
so we were not only reconciling the forms, we were reconciling the CCH input forms with the final tax return. So when it finally got to the point, and I was like that when I bought that practice in Indian Trail, that fellow was using Drake software. And Drake, I don't know if you know, but that fella is from Franklin, North Carolina.
Yeah.
Father was a CPA, and he was a computer science major at NC State.
Okay.
And he would work for his father in the summer and said, "There's got to be an easier way." And so he put the software together. It was DOS based. And, for years, I had that, Deloitte ego. Oh, don't, buy this product. It can't be any good. Let's go over here to CCH and pay 10 grand when we could be paying $300 for.
Mm.
And one time after tax season, I was sitting down, and there was a comparison of the fees and the forms that it did. And Drake did everything that CCH did. I was just dumbfounded. So I called him and ordered up and had. And at that time, at first they came in as floppy disk, and then we went to the little CDs, and we thought, "Oh God, this is awesome! This is only taking 8 hours to load on the computer." And to where now it just uploads automatically, instantaneously. It's pretty cool. But that saved me. That allowed me to do taxes at a really reasonable way, and for me. And plus, once I got used to it, I even went to a 3-day tax school in Franklin this summer, because there's so much I still don't know how to make it work.
Mm.
Uh, but it fits my practice perfectly. So
Yeah. And then the speed at which Congress is changing the tax code. I mean, that's definitely picked up, right?
I think it's insane, and I think that the Florida senator, he said something once, it made sense to me. If you're going to dismantle the Internal Revenue Service, okay, do that. But now, what shouldn't we dismantle the code? Shouldn't we bring the code down? I don't know about you. I'm probably on my 50th hour. Yesterday, I sat in on 6 hours. We kept being asked, "Are you comfortable with where you're at now?" I'm comfortable, but I'm sitting there thinking, you know, um, I still have to look things up. And before, I would use outside research groups. But what I had to do was either call and talk to somebody and tell them the issue, and they would research it and get it back to me.
Hmm.
It then got to the point where you could upload your question online, but it might take 3, 4 days to get an answer back, and it may not be on point for what you're doing. So what has been a game changer for me on the complexity is the AI assisted, the one that I'm really, grateful for right now. I've told you 100 times is Ask Blue Jay,
Mm-hmm.
and I'm integrating it into my practice more and more and more. Um, I don't know that I have really. I don't know if I have overly complicated things. I don't get into trust and high network people, but for what I do, the ability to get a question answered in a minute or two and be on point with the resources has really given me a confidence level. So when I'm in courses, I'm taking keynotes and stuff, but I'm not worried about, oh, I got to know exactly how to do this because I got a backup to it.
Yeah.
So
Yeah. I know in 2008, we had the desktop reference that Edward Jones or somebody would give to you. And then, and I could find 90% of what I needed because I was new. So I'm just looking up stuff in there, or, you're quick checking a number that might have changed from year to year. And then we had, RIA checkpoint through Thomson Reuters, and
Right.
they would send us our daily email updates with any kind of updates and stuff. But that was where we would go for more in-depth stuff. And aside from that, I just went to the guy down the hall, and he seemed to know everything that he needed to know. And so, but yeah, I mean, like, they just keep adding new stuff. They don't take anything away. They just keep changing and adding new stuff to it. So
Right.
it's
Yeah,
crazy.
I kept thinking, well, with them dismantling the Internal Revenue Service in terms of people, the service is really going to a digital first mindset. And so, the medical profession has done that. I don't know how older people ever schedule an appointment. I'm hanging on for dear life, but I'm fortunate enough that I can navigate an app. I can navigate the website sometimes. But the ability to just pick up a phone and get help or schedule an appointment is going away. It's the same thing. I think what they're going to do is assume that they can digitize the communications between the two, and there'll be some disruption. You and I will be the middle guy navigating that for our clients.
Mm-hmm.
And it'll be interesting to see how the response times go. But we're clearly going in that direction. But we could use a wholesale simplification, but it just seems like all it does is keep us busy. It's like this new HR1, you'll hear like, well, you get a car tax interest deduction, but if you go through the phase out exercise, who qualifies?
I'd tell a bunch of people that too. It's like, okay, so we get this $10,000 deduction for car loan interest. Well, in order to have $10,000 of car loan interest, that's a really expensive car. And it phases out with married filing joint at $150,000 of AGI. So if you could deduct $10,000 of car loan interest and you're below the 150, you got big financial problems because you shouldn't be having that much of a car loan with the amount of money you make, right? Like, so in real practicality, what it's going to be is it's going to be $1,000 or $2,000 deduction for somebody who bought a new car. They're going to save $100 in taxes, and yeah, I mean $100 back in your pocket. I like that. That's good. It just seems like a political talking point because on the ground, it's really not going to help anybody that much. They could have helped out people a lot more with something that would have been even easier to deal with.
Right. I was in a class the other day and the instructor said, there are still people who are going to come to you and believe that their Social Security is not taxable.
Oh, yeah.
And you got to stay on top of it. And I was like, oh my God, but you and I are in this every day. We're thinking it and looking at it, but I just had to sit back and think, oh my God, that's probably true.
Yeah.
And I've had people say, hey, I don't think I'm going to pay taxes because my Social Security is. And I'm like, are you kidding me?
Yeah. Meanwhile, $50,000 of their Social Security is taxable.
Right.
Yeah.
Right.
Well, oh man, I keep talking to you, Jack, all day, but I got another appointment at 2:00, so I'm going to have to let you go. But man, I appreciate this. This is great. And I wish I had more people signed up to give me more of kind of like through the decades kind of look at it, because it's just fascinating what things have changed. And I mean, I mentioned the P's limitation like to somebody on LinkedIn recently, and they were like, "Oh, Brad, I knew you would come up with some like random like old historical fact," and I was like, "Old historical fact? Like we were talking about the P's limitation every day in 2008 to 2012," and then it dawned on me like, well, actually, that's still current because the Tax Cuts and Jobs Act was what did away with it temporarily, and then the OB3 got rid of it permanently. So it's still actually current. So that let me know that person was more recent than TCJA if they didn't know about the P's limitation.
Well, let me tell you something. I don't think what I have to offer you from the past is worth a damn, but what you are doing and how you're bringing people together and bringing information is really helping me pivot on this last 5-year journey of my career. So I'm really grateful for what you're doing. And I think the world belongs to the young. I'm just listening and saying, oh, yeah, that makes sense. And I wish I had thought about that 100 years ago. So keep up.
Yeah, that's great. I mean, you can see it I see it on LinkedIn, right? So many more people are willing to share what they're doing than what even 10, 15 years ago it felt like people were willing to do, to open up and talk about kind of here's what I'm seeing and here's what I'm doing. And so, yeah, I mean, a lot of other people went before me in terms of sharing what they were doing. But yeah, it's been great just connecting with other firm owners because, it's a lot easier to go through it in community than than by yourself trying to figure everything out that somebody else has already figured out before you. I'm just at 41, I'm just kind of curious before, I start to get to be the guy that's not relevant anymore.
Yeah, you got a long runway, brother. Take advantage.
Yeah, I got a little while. I hear, they say 40s and 50s are kind of your most influential decades. So I'm right entering into it. So
I will tell you, your 60s and 70s are where you can really improve your net worth, though.
yeah.
So my father-in-law was self-employed, and he taught me that, and that's really true.
Well,
So
that's
the
where
other,
too. I mean, it's an unfortunate thing. I feel like that's pretty typical in American culture. It's not as typical in more Eastern cultures. Is we really don't value the wisdom of the older generations, right? It's all like, oh, they don't understand the new technology. They don't understand this, and it's like their life experience matters. Like experience matters, and when you've seen a few things, you can kind of tell. Yeah, the technology is different, but X, Y, and Z is repeating itself. This has happened before. I've seen this before, and here's what you can do about it. So it's kind of unfortunate that our culture doesn't seem to value that as much as some of the other cultures do.
yeah, I think it's a combination. The old guy has to ride the brilliance of the young guy, and the old guy also has to give affirmation to the young person. The young
Mm,
person is to figure out, is it right? They're second guessing themselves. And if you can give someone to say, you're on the right track, that's all they need. You
yeah.
don't need, can you imagine me be on the phone and say, Brad, if you want to grow your practice, I'm going to tell you to get out the phone book with the
Yeah.
yellow and just start dialing numbers. Somebody's going
Yeah.
to want to work with you soon.
Yeah. Well, that's really good. I guess that's a good spot to end too, because that advice is great, right? Like the older generation needs to be open to being challenged by the updates and learn
Absolutely.
from what's changing. But the younger generation needs to listen to the wisdom and, like, hey, here's how things can work and, dialing into what they've learned over, a long successful career.
Right. Right.
Yeah.
Okay, bro. Well, listen, you're doing a great job. I love these interviews. Keep
Yeah.
them
Thanks,
up.
Jack. Appreciate you coming on and doing it.